Good morning, guys. So it's going to be a super short one this morning. So you can see we're on the 4-hour here, in this range that we've been forming since, well, basically this year. The first fixed range pull, I'm quite a fan of these fixed ranges. Is from that drop the 5th of January, 6th of January into this range that we are in right now. So I just want to go ahead and mark that value area low there. So that I think that's a crucial level. So maybe just getting back to yesterday, we were up here somewhere, and I said I'm expecting lower. I think I was talking about that $40,000 area. Okay, but we actually retraced a bit deeper than that 40,000. I expected that to hold. We had some levels further down, obviously the high volume node here. Remember I said we've got a bit of a low volume there, and then we found our support here on the higher volume. I must say I quite like these when it starts printing those long wicks down to the bottom. I think I've spoke about that before as well. You see those long wicks to the bottom, then it means it's trying to go lower, but there's support, and the bulls are buying up the lows or the basically the sells. Okay, so let's get back to this. I said it will be super short. What I'm basically saying is I'm feeling quite bullish there, although if you look at that, if you isolate from that red there, you'll also see there's 3 quite long candles, or wicks down. I'm talking about the wicks. So not always, but it's just one of the things I do look at, although I think we're going to go slightly lower here because it just doesn't make sense just to stop there. I've got another fixed range pull here of this little zone or range that we were forming here, and if you can see we've just moved into that there's the value area high. So we've just moved, and the value area high corresponds with the top there. So we were just there like last week. So the point of control there lines up with this value area low. So we've got our second confluence, and then there's one big other confluence, and that's we've got a naked daily point of control. So I know you need a paid platform to figure out these naked daily point of controls, but that's why I will give them to you, and this is a really important level here. That's all I wanted to say. Just look out for this. Don't blindly set limit orders. Check for the reaction. Maybe if it goes down, pull a Fibonacci and see if it's going up again. Let me just show you what I do. So if we zoomed in here now on this reaction that we had there, go to the Fibonacci. That one was quite deep. Let's go to this one. Go from the low to the high there. So if you were there, then there was a retrace there, and that was your entry for going up higher. So it's really difficult to say if you actually get this candle down. So in a 30 minutes, if this was the low, or that was the low, see it comes down again. So you could have blindly entered there, but that'll be really, that's just like gambling. That's not trading. So you really wait for a retrace. So ideally I would have done this. Sorry, I would have done that and pulled it up to there, and then as we came through here, I said no, we're still going through, not pulling back, still going through, not pulling back, and going, and if it gets down this low, then I just wait for lower. So that's my reasoning. So, and when I pull the fib up here, I wasn't actually watching this. I slept a bit late this morning. So you wait for it to go down, pull back, and when it's above that golden pocket or that 618, then you can actually enter there. So you still would have been safe there, and you would have had a decent, well, it's 0.5% up. It's not a lot, 0.5% up. And if you really want to limit your risk, you can immediately put your stop loss at entry. Might easily get stopped out again, but that's playing it really safe. But this will be the level I'm looking for, 38 to 75. That's like perfect confluence. That's it for today. Enjoy the weekend. Talk again soon.